You know that feeling when someone says, very casually, "We really must sort our paperwork one day," and then the room goes a bit quiet. It happens after a funeral, or after a bank letter, or when one of the children asks where the will is, and nobody quite meets anybody else's eye. Most families are not hiding anything wicked when this happens. They are simply hoping that silence will somehow be cheaper than clarity. If you like these quiet, plain English chats that help you stay one step ahead of the system, do consider subscribing and keeping this channel nearby. I try to speak about money matters the way a decent neighbor would speak across a kitchen table. No fuss, no clever talk, and no trying to sell you your own worries back to you. Just steady help for the things that really can go wrong if nobody explains them properly. Today we are talking about inheritance tax in 2026, but the real subject is not tax first. The real subject is the cost of the conversations families keep putting off. I want to give you 4 talks families avoid and 2 simple checks that make those talks stick, because inheritance tax is very often a silence problem before it becomes a money problem. First comes the talk about what is actually in the estate, because many families are working from a picture that only exists in their heads. Somebody says, the house is mortgage free, so the children will be fine. And that sounds comforting, but it is not a proper calculation. An estate is not just the house. It is the home, savings, investments, possessions, and in some cases, other money people forget to count until far too late. The basic inheritance tax threshold is still £325,000, and the standard tax rate above that is usually 40%. In many ordinary cases, anything left to a spouse or civil partner passes free of inheritance tax at that point, and unused allowances can often transfer across. That is why some couples can pass on much more later, but only if the paperwork and timing support it. And if 10% of the net estate goes to charity in a will, the tax rate on some assets can drop to 36% instead of 40%. The phrase I want you to write down for this first talk is this: what exactly is in my estate and who already knows? That question sounds simple, but it cuts through a great deal of family fog very quickly. It brings you back to the central theme of this whole video, which is that clarity protects families better than guesswork ever will. And if you value these calm little nudges towards clarity, you might like to stay with the channel and subscribe. Second comes the talk about the home, because this is where many families mix up affection, fairness, and tax rules until they become one big knot. You will often hear someone say, well, the house is going to the children anyway, so there will be no inheritance tax on that part. That is not how the rules work. A home can help with tax, but only if certain conditions are met, and those conditions matter more than many people realize. There is an extra allowance called the residence nil rate band, which is a dry official name for a very important family rule. In plain English, if a qualifying home is left to direct descendants, there can be an extra £175,000 allowance on top of the normal £325,000 allowance. Direct descendants usually means children, stepchildren, adopted children, foster children in the right sense, grandchildren, and certain lineal family members through them. But if the estate is large, this extra allowance starts to taper away once the estate goes above £2 million. So when people say the children will get the house tax-free, the better answer is maybe, but let us check the exact route and wording first. For some couples, those allowances can combine, and people often talk about a possible £1 million shield across 2 estates, but that only works when the rules are actually met. If the home passes in a way that does not qualify, or the will is vague, or the estate is larger than people think, that comfort can disappear very fast. This is why the house is not just an emotional asset, it is also an administrative asset that needs a proper plan. The phrase for the second talk is this: who is the home meant to help? And does the will say that clearly enough for a stranger to follow? That last bit matters, because after a death, your family may be upset, but the system will still expect clean answers and proper forms. Once again, the central theme returns. Inheritance tax is often less about wickedly high numbers and more about silent assumptions no one tested. And if you want more of these quiet warnings before they become family headaches, subscribing is a sensible little favor to your future self. Third comes the talk about gifts, and this one catches all sorts of decent, generous people who simply wanted to help. A son is struggling with a deposit, a granddaughter needs help with rent, a nephew has had a rough year, and out comes a transfer from savings. Nobody sees it as inheritance planning at the time. They see it as family, which is exactly why it is so often done without records. Now, some gifts are completely fine within the rules, but the details matter very much. you usually have an annual exemption of £3,000, and you can carry forward one unused year if you did not use it. You can usually give small gifts of up to £250 per person in a tax year, and there are special allowances for wedding or civil partnership gifts. There is also a very useful rule for regular gifts from surplus income, meaning money you can genuinely afford to give after meeting your own normal living costs. Then there is the famous 7-year rule, which people repeat a lot, often without the bits that make it usable in real life. Broadly, if you survive 7 years after making a gift, it usually falls outside the estate, unless a trust or certain other complications are involved. If you die within 7 years, the timing and amount matter, and taper relief can reduce tax on some larger gifts made between 3 and 7 years before death. But even that relief only becomes relevant in the right circumstances, which is why family memory is not good enough and paperwork matters so much. Let me give you Margaret, who is 68, widowed, careful, and exactly the sort of woman who says she has never been interested in money beyond paying her way. 3 years ago, she gave her daughter Helen £20,000 towards a new roof and another £15,000 the year after to help with childcare while Helen went back to work. Margaret never thought of either payment as a tax event. She thought of them as what mothers do when the family needs a hand. When Margaret finally sat down with her papers, she found old bank statements, half-remembered dates, and one transfer she had completely forgotten. Nothing criminal, nothing dramatic, just the sort of muddle that turns a simple estate into a longer and more stressful job for the children left behind. The phrase for this third talk is, if it was a gift, it needs a date, a figure, and a reason. And if this sort of practical calm is the kind of help you want more often, you may find it worth subscribing so these reminders keep turning up. Fourth comes the talk about pensions, and this is where many families are still working from yesterday's rules. For years, plenty of people were told, or half heard, that pensions sat in a different lane and could be very helpful for passing money on. That led some households to spend other savings first and leave pensions sitting there. For some people, that thinking may soon need a very serious review. From April 6, 2027, most unused pension funds and many pension death benefits are due to be brought into the estate for inheritance tax purposes. That does not mean every pension payment becomes taxable in the same way, and there are still exceptions in certain cases, but the broad direction is very clear. So 2026 is not the year to shrug this off. It is the year to check what pension money sits where, who is named on the forms, and whether your old assumptions are about to go out of date. This matters because people often focus on the will and forget nomination forms, expression of wishes forms, and the simple question of whether the family even knows the pension exists. A very ordinary household can have one old workplace pension, one personal pension, and one set of forms nobody has looked at in a decade. The phrase for this fourth talk is, what sits in my pension, who is named, and what changes in 2027 for my family. And if you want a steady voice keeping an eye on rule changes so you do not have to learn them in a panic, that is a good reason to subscribe as well. Fifth comes the talk most people say is not about tax at all, even though it can save a family a fortune in strain, delay, and bad feeling. It is the talk about who does what after a death, and whether the arrangement feels fair before grief enters the room. One child lives nearby and does the caring. Another lives far away and says, just tell me what needs signing. The legal tax bill may be one thing, but the human cost can be something else entirely. If nobody has said who the executor is, where the paperwork is, who gets first call from the bank, who deals with the house, or how a lifetime of help should be understood, resentment rushes into the gap. That resentment can slow everything down, and delays have their own cost in valuations, legal work, practical upkeep, and plain emotional wear and tear. Quite often, the hardest inheritance problem in a family is not the tax bill itself, but the silence left around it. So the phrase for the fifth talk is this: who does what, and what would feel fair when emotions are running high? That is not a pleasant sentence, but it is a merciful one. It brings us straight back to the central theme, because silence does not preserve family harmony. It merely postpones the argument until people are at their weakest. And if you have ever seen a family wobble over paperwork and old assumptions, you may already know why these conversations matter more than pride. Sixth and last comes the check that turns all these talks into something solid, and it is simpler than most people imagine. You do not need a grand leather folder and a special pen, though if that makes you happy, fair enough. What you need is one clear place, one clear page, and one clear routine. Without that, even good decisions can vanish into drawers, handbags, loft boxes, and half-finished intentions. The one clear place is where the important papers live: the will, the pension information, the list of bank accounts, the record of gifts, and the contact details for the people who would need them. The one clear page is a simple summary in plain English saying what exists, where it is, who to contact, and what needs special care. The one clear routine is a yearly review, perhaps after the tax year ends or around your birthday, when you quietly ask what changed, what moved, what needs updating. That routine is boring in the best possible way, because boring is usually what prevents chaos. If you are wondering what to call this little habit, call it the peace of mind review. Make a cup of tea, sit down for half an hour, and go through the 6 parts we have covered today. What is in the estate? What happens to the home? What gifts were made? What is happening with pensions? Who does what? And where the records now live. And if having a calm guide for that yearly review would help, you are very welcome to subscribe and let this channel keep you company. Now I want to come back to the main point, because it matters more than any single threshold or allowance. Inheritance tax in 2026 is not only about whether the number is £325,000, or whether the extra home allowance is £175,000, or whether a gift was made 6 years ago instead of 8. It is about whether your family will have to do detective work while they are grieving. That is the part people forget, and that is usually the part that hurts most. A tax problem can sometimes be managed. A paperwork problem can often be solved, but a silence problem spreads into every room at once, because it touches money, memory, fairness, grief, and trust all in one go. That is why these 4 talks matter, not because they are cheerful, but because they are kind. If there is one person in your life who would quietly benefit from hearing this, perhaps a parent, a brother, a sister, a neighbor, or that sensible friend who always means to sort things out next month, do send it to them. Not as a warning shot and not as a lecture, just as a small act of care. Sometimes the gentlest nudge is the one that finally gets the right drawer opened. I often think of this whole subject like leaving the house ready for somebody you love to enter after dark. You cannot remove the night. You cannot promise they will not feel sad when they open the door. But you can leave a lamp on in the hall, you can label the switches, you can clear the shoes from the floor, leave the keys where they can be found, and put the important note on the table where nobody has to hunt for it. That is what these conversations do. They do not stop loss. They do not make death tidy or easy or fair. They simply make the path less frightening for the people who come in behind you. And in the end, that may be one of the most practical forms of love there is. So if this subject has been sitting at the back of your mind, take that as your sign to begin gently, speak plainly, and write things down. A calm family is not always the family with the least tax. Very often, it is the family that had the courage to stop whispering and turn the light on.